Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield Anchor reporter Megan Grebner. With us is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right. To get things started today, because we have plenty to talk about reports and information-wise, but to kick things off, let's recap what's happened this week in the markets.
Yeah, on the cattle side, live fed cattle were basically unchanged for this week, while we saw all those feeder cattle markets that were steady to $4 higher for the week. On the futures side of the equation, the August live cattle futures contract was down $1.70, while the August feeder cattle contract closed down $1.50. Choice box beef price was down $1.30 this week. Really had weakness in loins and briskets leading the way on that components of the box beef price. Switching gears on the hog side, the cash Barrow and gilt price down about $3.75 this week, while the July lean hog futures contract closed down $4.50. The pork cutout value also fell this week, down about $4.25. That now puts it $12 below where we were a year ago at this time, and we had weakness across the board in all those pork cutout components.
I'm assuming much of what's happened so far this week or through the week, especially on the hog side of things, kind of took some direction from yesterday's Hogs and Pigs report. Let's talk a little bit about that report and get into those numbers.
Yeah, so it is a mixed bag that we got out of yesterday's report. Probably don't want to be too bearish or too bullish either way longer term, but a few things I think are worth talking about. If we look at that breeding inventory, 6.41 million head as of June 1, that was 1.4% higher than where we were a year ago at this time. That actually came in a little below the pre-report estimates when we look at that number. We did get some revision in pig crop data over the last couple of quarters that gave us another 600,000 head there to deal with. So more pigs from that standpoint. I guess the one that jumps out to me, you look at pigs per litter March through May. The pre-report estimate midpoint would have put that up 0.8% when it came in 3.5% higher. So 11 pigs per litter weaned. And when you look at the data, a number of states saw substantial increases in pigs per litter. Perhaps a better situation from some disease events like PRRS have been helpful to what we've seen in terms of those pigs per litter. So a little bit of mixed bag in terms of more pigs per litter. Maybe that breeding herd didn't grow quite as much as we might have expected. If you look at the farrowing intentions, the last part of that, farrowing intentions for the June through November period basically suggest producers are going to be unchanged in terms of sows farrowed. We'll wait and see what we get at the end of the day, but with a 1.4% higher breeding herd, I might suggest we'll get a few more sows farrowed than intentions might have suggested.
How does, as we see these large numbers again, how does the whole demand picture come into play here? Are we still seeing fairly strong domestic demand? Are we still turning to the global picture and hoping we see an increase in demand there or a significant increase in demand for U.S. pork there as well?
Yeah, so I think when we look at the domestic side, it's been a good period for demand for pork on the U.S. side, and thank goodness. We can talk about that. I think when you look back, we started the year with prices that were kind of moving lower as we went through time, and then we got this big boost in prices. So much of the uncertainty has really come around the international side and what really happens on that export side. And as there's been more concern about what the potential growth in exports will be, it just tells you a report like this means more pork trying to head to domestic markets if we don't get the opportunity to export it. From that standpoint, I think we have to keep watching that export side. To me, that's the most critical piece. I sometimes say, doing this outlook, it's like Scott Brown riding on one of those hoverboards. I don't know if I'm going to fall on my face or fall on my rear, but one way or the other, I'm not going to get this right. And it's a little humorous to think about the fact that hoverboard was probably made in China. But it just tells you just how much uncertainty that we have on the price side of pork.
And then, I mean, it's not just China, I would assume. It's also Mexico and getting that situation and USMCA across the finish line, because I always take a look on our when we look at the pork cutouts, what's going on with the hams, and we see good positive movement with trade talks or the USMCA with Mexico. We see hams boost a little bit. We don't see the progress, and we see all that fall back. And I have to think that we'd like to see, or producers would like to see, some growth, but then also see the demand that they had expected to see increase actually increase.
Yeah. So correct. All these trade issues matter. USMCA for sure. I think we've seen so much better ham values than would be the case if we still had tariffs in place with Mexico. And so I know a lot of folks are less than thrilled with where pork cutout value sits today, but think about where it could be if we even had those tariffs remaining. So getting that USMCA to the finish line, I think, is important. We can talk about Japan being also important to pork markets. So, all those things matter a lot. And when you're moving, record volumes of pork in this country today, you need all of the demand gears moving forward for you.
Scott, the other big report this week, Restaurant Performance Index, which also kind of relates back to the demand picture and those positive feelings there as well. Let's talk a little bit about what we saw this week.
Yeah, so we got the May report, May numbers out for us. So a overall index of 101.6, so an actually nice boost back after an April report that was unchanged, really relative to where we were. Current situation and expectations both look good in this report. Current situation at 101.5, the expectations component at 101.7, both of those showing expansion going on. Good numbers across all those subcomponents as well. It's the first time in several months that we've seen every one of those subcomponents, whether it's same store sales, customer traffic, all those going up. So some good news out of that report in terms of maybe domestic demand.
Scott, we touched on the trade issues a little bit. We know it's nighttime in China right now, or it's nighttime in Japan right now, where the G20 is being held. We know that there's talks happening this week. As we take a look at that, it's kind of it might happen, it might not happen, and a wait and see. How significant is that deal specifically to not just the hog side of things, but to the ag sector in general?
So I think it's critical. I'll take hogs to begin with. If we don't end up with an agreement as we get later in the year and we get no additional really export boost happening from, let's say, China, I worry about what it means for hog prices for us late this year. Just the increase that we have. All of a sudden, we might be talking about per capita consumption levels that are closer to 52 pounds, which we haven't seen in a long, long time. And just what's that take to clear those markets? So I do worry about the price side that could unfold without a successful agreement. So I think we have a lot hinging on what happens, and you can go beyond pork. I think it matters for the beef markets as well. Just all of this uncertainty continues to make markets volatile and difficult to project.
Interesting report coming out of USDA today as it relates to acreage. They have followed that up to say that they will resurvey. Was there a little bit of sticker shock? The numbers come out from USDA today?
I think there was a little sticker shock out of those numbers. I think folks thought there would certainly be fewer corn acres reported than what USDA gave us today. Trying to decipher all of that, I think it's hard now, because I do think we saw a lot of plantings trying to happen very, very late in the season. That probably got missed in the survey, so resurveying ought to help us with that. But a 91.7 number, I think, wasn't what folks expected pre-report. I just glanced through the numbers. I saw Missouri with a 3.4 million acre corn plantings down just 100,000 from where we were a year ago. I'm going to be surprised if we got that amount of corn planted in Missouri, just given the number of acres still underwater in many of the Missouri and Mississippi bottom areas of this state. So to me, there'll still be some downward revision, but it's going to leave markets uncertain again for a period of time and exactly where plantings ended up.
I think we're going to have a lot of uncertainty, at least on, well, pretty much on all sides of it, for the unforeseen future, I expect.
Yes, I agree with you on that front.
Scott, as we look ahead to next week, shortened week because of the July 4th holiday, but that does not negate any reports. We have a couple of those. What are we looking at next week?
Yeah, so we'll get a jobs report out at the end of next week, and we'll also talk about new monthly trade data as well. So plenty to talk about in terms of what it means for markets.
We will look forward to chatting with you next Friday. Have a great week.
You do the same, Megan.
So our weekly livestock market update delivered to your email box every Saturday morning. Visit our website, brownfieldagnews.com. Click subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner for Brownfield.